quarter, but the September quarter could be meaningfully better.
Okay. You might have a lot of answering to do to all the sell-side analysts once you go back, Ridham, stating that they never get their assessments right. But be that as it may...
On the aggregate, Sonia, on the aggregate. See, individual analysts will always make their case to me, and I appreciate that. And a lot of them get great calls. Okay, let's put this on the table here. My calling of the market, and I have done this over the past, I've been doing this for 23 years now, is worse than a toss of a coin. Is worse than a toss of a coin.
No.
I think you should give yourself, a little more credit than that, Ridham. Come on.
No. I'm telling you, it's a fact. Okay, it's worse than a toss of a coin.
No, Ridham, you are a stock that may at best disappoint for a quarter, but a quarter down the line, the numbers come all right. All right. In any case, what is the pick of the pack at this point in time? You would go, of course, I saw Anil's report, private sector banks are very strong on your list. Would capital goods be on your list? Would metals be on your list? Or is it a complete avoid on metals, materials, oil and gas?
No, I think I've certainly put industrials and private banks. They're right up there, top picks for us. I think industrials will surprise on the upside. The sector is doing actually quite well. It's well supported, and I think it tells you something about what the market also thinks about it. But overall, I think the earnings progression there will be quite strong. Likewise with private banks, they are in a sweet spot, the private banks. And I completely concur with Anil, because they are going to gain market share, and they're going to probably have rising NIMs. Their largest competitors have broken balance sheets and are likely to struggle to actually, keep their market share, or in fact also their NIMs. So this is a sweet spot for private banks. We can't get more bullish than what we are on private banks. We are very, very bullish. Some of the target prices we have on individual stocks suggest an upside of 40–50% over the next 1 year. It doesn't get better than that. Aside from that, I think we actually did discuss this when I was in the studio a while back about urban consumption. And I think we're getting more and more confirmatory signals that urban consumption is coming back. The fact that real wage growth in urban India is turning higher because inflation is under control and jobs are coming back slowly, steadily. It's feedback I'm getting from the conference attendees yesterday. So I think you want to buy bits of urban consumption, whether it's in the auto sector, whether it's in media, whether it is in discretionary consumption, retail. I think some of these are interesting sectors for the next few months. And I also like technology. I mean, I am convinced that the environment for technology is not as bad as the share prices are suggesting. And therefore, I think technology should also do well.
All right, so let me try and squeeze in one last question before we run out of time. The most interesting point in your strategy note is that you've added Coal India to your focus list at the expense of names like Bank of India and ITC. I know you won't comment on individual stocks, but on coal itself, we've been getting a lot of positive comments from Anil Swarup. Do you think that even for investors who've not made use of this positive trajectory so far, there's still way to go?
See, Sonia, that is part of what the government has done on the policy front, which is it's taken the most important areas and fixed. On coal, I think there's been concerted effort. They've taken one of their best bureaucrats and put him in charge of coal to fix the sector. And I think we're on our way to fix the sector, whether it was the auction process, whether it's the production statistics, whether it's evacuation, whether it's building the infrastructure, or it is the recent decision to sell sell more mines to the other sectors. I think all these are in the right direction. The resource allocation, or I should say the resources policy of the government, is something which is very high on the priority, and therefore some domestic resources companies, I think, will have a good time over the next 2 or 3 years. So it's a sector you want to be in. I think Lata asked this question about metals, and I did not answer that. I think I missed it. But, global commodities are still in a weak spot. And therefore, some of these global commodities may struggle. But local commodities, I think, are looking quite good. Because I think the government's efforts to fix the sector, and therefore, when growth comes back, I think they will do quite well.
Okay, our brethren in Awaz are fighting with us. So let me quickly squeeze in just a half-a-minute question. You know, globally there are still bond yields rising. Do you think the global scenario is going to be at least lukewarm for the year towards India?
It is challenging. Yeah, it's challenging, Lata. The global environment, it's very confusing. I think there's a lot of repricing happening in the asset markets across the world, whether it's credit markets, bond markets or equity markets. I think investors are trying to grapple with whether they're going to deal with inflation, growth or stagflation or whatever, and whether they're going to be faced with a rate hike from the Fed. So it is a confusing time, and that I think feeds into India. So part of the uncertainty that you see in India on a day-to-day basis is not really India related anymore. I think 2/3 of it is global now. And I think we're going through a patch where there is a bit of volatility in the world, and it will settle down at some point in time when I think when the Fed takes its decision either way. But for now, at least, I think that's feeding into India.
All right, Ridham, have a great conference, and we'll wait to hear from how day 2 has progressed. But thank you for stopping by and telling us that the mood has gotten better, if not getting better as we speak. Thanks.